Joining us now to discuss what is next for China is Dennis Unkovic, partner at Meyer Unkovic and Scott. He's assisted companies with investing in China. He's also the author of the book, The Fragility of China. Dennis, great to have you with us.
Melissa, thanks for inviting me back again. How are you?
It does seem like China, it has a two-speed economy. It's got AI. Exports are actually doing fine. But then on the domestic side, things are very weak. And it also seems like Beijing is kind of okay with that at this point. There's no huge stimulus plans or anything like that to rescue the domestic consumer. What should we make of this?
Great questions. The most important thing is Xi Jinping has decided that if he's to stay in power and if China is to grow, that he has to do it through technology. And he basically has been ignoring parts of the economy. For example, a third of the economy, the GDP, is made up of real estate. It's been in the tank for the last 5 years. And the debt to GDP ratio, I don't mean to be too wonky here, but the debt that China has to its GDP is 300 to 100 or 3 to 1. As bad as we say the United States is, really, we're like 140 to 100. So the bottom line is, I think that Xi Jinping is making a big bet, and it's probably not a bad bet that he has to pull the economy through increased manufacturing, better technology, and that's the way to do it.
Dennis, I mean, it's worked before, and I guess the predictions that things will break in terms of the stability of China have gone unrecognized or unrealized before. I'm wondering in this particular moment when we've seen China's massive stockpile of oil, for example, act as, whether intentional or not, a stabilizer for global supply at a time when we had issues with the Strait of Hormuz. We had a report last week that there aren't enough ships for all of the EVs that China is exporting. It seems to me all this together means China will long-term remain a source of disinflation in the global economy.
I think you're absolutely right. Xi Jinping, in trying to put all of this together, has felt that in the long run, their ability to manufacture wasn't good enough 10 years ago. They had something called the Made in China policy that was put in 2015. What they wanted to do was stop manufacturing from this moderate level to the higher technology level. And that's why when he put the pressure on saving oil, I really think that the Chinese have a really good shot at moving forward much more quickly than I think some of the skeptics think they do. And I've written a book called The Fragility of China, but you have to be honest. They really have done a good job in marketing what they have. Look at DeepSeek. DeepSeek is now much less expensive than many of the things out there. You can go online and use it, and it's open source, and it's much less expensive than the others. And I think technology is not going to be the full answer to the Chinese economy because they've got the real estate problems and they got the debt problem, but they're moving ahead.
And they are getting sort of the rest of the world hooked on these cheap components and the models, the cheaper models that they are producing for the AI race. I mean, the U.S. may say now, no, Apple, we don't want you to buy CXMT chips, and we should be concerned about Chinese open source models. But the rest of the world are using this, I mean, to the point where semiconductor exports from China are adding 10 percentage points to total export growth out of China. I mean, it's amazing, Dennis. And so, in terms of where China is positioned and how it's positioned here in terms of globally in the AI race, as we go into the meeting with President Trump in September, how much leverage does China have here?
I heard today, Melissa, that the meeting's only one day. So obviously not a lot's going to be done. But I think that Xi Jinping is going to put enormous pressure on the president to say, lower the tariffs or at least make these products. You mentioned Apple a minute ago. They want to buy the Chinese chips. I think there's going to be tremendous pressure on the president to do this. And I don't really see how in a global economy where the least expensive product, if it's relatively equal to the most expensive product, doesn't do well. And that's where I think the Chinese have put their finger on it and at this point look pretty good.